Have you ever looked at a stock chart and thought, how did everyone miss this? Because here's the truth. Every single year, the market leaves behind a handful of deeply undervalued stocks that later explode in value. And the investors who spot them early build insane wealth. Today, we're diving into exactly how to identify the most undervalued stock with huge potential and why the next big winner might be hiding right in front of you. Let's get started. 1. The truth about undervalued stocks, what most people get wrong. Most people think undervalued simply means cheap, but seasoned investors and the ones who consistently win know better. A stock isn't undervalued because it's low priced. It's undervalued because the market has mispriced it relative to its real value. Undervaluation can happen when investors are fearful, a sector falls out of popularity, a company is misunderstood, temporary problems scare people away, the market overreacts to short-term news. And here's the part people forget. Some of the biggest stock market winners started as undervalued, ignored, or doubted companies. Tesla was once considered a joke. Apple was nearly bankrupt. Netflix was dismissed as a DVD company. 2 decades ago, Amazon was just a bookstore. History proves something important. Undervalued stocks are often found where people are not looking. 2. The 4 pillars of identifying a massive undervalued winner. Real investors follow a system. If you want to spot the next stock with huge potential, you need to understand 4 key pillars. Pillar 1, strong financials. You're looking for companies that are profitable or close to it, maintain healthy cash flow, have manageable debt, show consistent growth. A company with strong fundamentals but low stock price is an opportunity. Pillar 2, misunderstood potential. Sometimes the market misjudges a company's future. This happens when a new product is underestimated, a sector temporarily falls. Analysts overlook long-term catalysts. Undervalued stocks usually have upcoming growth drivers that aren't priced in yet. Pillar 3, industry tailwinds. A company can rise simply because its entire industry is rising. Examples of sectors with major growth: AI and automation, clean energy, data centers and cloud computing, healthcare technology, cybersecurity, fintech, robotics and manufacturing tech. If a company sits in a booming industry but its stock price hasn't caught up, you may have a winner. Pillar 4, strong leadership. Management matters more than most investors realize. A visionary CEO can turn undervaluation into rapid growth. Every great comeback story begins with leadership that sees the future differently. 3. Why the market misprices stocks. The psychology behind the opportunity. Before we talk about how to find today's undervalued gem, you need to understand why undervaluation happens. The stock market isn't rational, it's emotional. People sell because they're scared. The news panics them. They follow trends. They lose patience. They chase hype instead of value. And when the crowd runs in one direction, valuation disconnects from reality. This creates the perfect opportunity for the patient investor who knows what to look for. 4. The formula, how to analyze an undervalued stock. Here's the simple framework used by smart investors. Step 1. Look for a temporary problem, not a permanent one. Great undervalued stocks usually have a temporary obstacle like supply chain delays, short-term loss, market uncertainty, a dip in demand, a temporary earnings miss. These are fixable. Avoid companies with permanent problems like declining industries, outdated business models, poor management, long-term debt traps. Step 2. Compare price to real value. Tools you can look at: P/E ratio compared to competitors, price to book ratio, price to future growth ratio, cash flow discount models. If a company's stock price is far below its fair value, you may have found something special. Step 3. Identify a catalyst. The most undervalued stock usually has one big thing coming: new product launch, new partnership, emerging industry demand, market expansion, regulation changes, new technology. A catalyst turns undervaluation into rapid growth. Step 4. Check insider activity. If company insiders, CEOs, CFOs, board members, are buying shares, that's a powerful signal. They know the company better than anyone. 5. The types of companies most likely to be undervalued in 2026. 6 o'clock to 7:30. Now let's talk about where the 2026 opportunities are hiding. Here are the categories of companies often undervalued today, but positioned for big growth. Category 1. Artificial intelligence infrastructure. Not the flashy AI software companies. I'm talking about the infrastructure behind AI, such as chip manufacturers, data center companies, cloud storage providers, networking hardware makers. These companies often trade below their actual potential because the spotlight is on AI apps, not the backbone that powers them. Category 2. Clean energy transition companies, especially undervalued players in solar manufacturing, battery production, energy metals, lithium, nickel, copper, grid modernization, renewable energy storage. Clean energy demand is rising globally. Undervalued companies in this sector may see massive gains in the coming years. Category 3. Fintech and digital payments. The financial system is shifting toward digital banking, real-time payments, mobile finance, decentralized infrastructure. Many of these companies are undervalued after recent corrections. Category 4. Healthcare technology. Healthcare is evolving fast. AI-powered diagnostics, robotics-assisted surgeries, personalized medicine, telehealth platforms. This sector has some of the most undervalued innovators. Category 5. Cybersecurity. As cyber attacks rise, companies that protect data are becoming essential. Cybersecurity firms often trade below their real future value because the average investor doesn't understand the industry. 6. The red flags. What to avoid in a cheap stock? Not every undervalued stock is a gem. Some are sinking ships. Avoid companies that show heavy long-term debt, negative long-term revenue trends, loss of market relevance, poor leadership track record, overdependence on a single product, decline in innovation. Cheap does not mean undervalued. Sometimes cheap means dying. 7. The secret. Undervalued stocks don't stay undervalued forever. The next undervalued stock with huge potential is hiding in plain sight. But here's the key. The market eventually corrects itself. When that happens, analysts upgrade the stock, institutions start buying, retail investors notice the momentum. The media begins covering it, price accelerates, value aligns with reality, and by then, the largest gains are already gone. Undervaluation is a limited time window. It's the quiet moment before the storm. 8. The winning mindset of an undervalued investor. People who consistently find undervalued gems share one trait: patience. Because undervalued stocks don't explode immediately. They require research, discipline, calmness, a long-term mindset. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." The investors who stay consistent in analyzing companies and ignore fear and hype are the ones who catch the biggest winners. 9. The roadmap: how to find your own undervalued stock. Here is a simple 5-step roadmap you can follow. Choose a promising sector: AI, clean energy, cybersecurity, fintech, robotics, etc. Scan for companies with recent dips. Look for temporary issues, not long-term decline. Check fundamentals: revenue growth, debt, cash flow, projections. Identify future catalysts, new partnerships, expansions, products, trends. Study valuation metrics. Compare price to earnings, book value, growth ratios. If a company checks all 5 boxes, you may have found your undervalued gem. The next big winner is out there. Here's the truth. There isn't just one undervalued stock with huge potential. There are dozens. But only the investors willing to look beyond the surface will find them. The market rewards curiosity, patience, research, vision. We're entering a decade where technology, energy, and innovation are reshaping the global economy, and undervalued opportunities are everywhere. Your job is simple: look deeper than everyone else. If you found this video valuable and want more content like this, don't forget to subscribe and like this video. See you in the next video.